3 steps to become a millionaire today. Welcome back to MATV, where I'm doing a new format of videos that are a bit more unscripted, blunt, real talk about money, investing, and the quickly changing world we all live in. So if you'd like to see more of this style, even as a once in a while video, please be sure to share this with someone, which helps the algorithms. It spreads the reach to more people. Like it, and drop a comment below to let me know your thoughts. Now, in today's video, we're discussing how I would invest my money if I were starting fresh today, okay? Now, before we dig in, let me address investing in yourself, which I scream from the rooftop as the #1 form of investing, including in my best-selling book, Life is Dope, 15 Stories of Hard-Won Hope and the Power of Perseverance. You can grab that on Amazon, but here's the skinny. Nothing comes before investing in yourself. Nothing. And if you're in middle management or entry-level positions, I'd be especially concerned about your survival over the next 3 to 10 years, as up to 60% of all jobs are predicted to be impacted by AI. Now, I highly suggest learning a trade or pivoting into high-paying positions in AI or cybersecurity, or well-paying blue-collar work. It's not popular, but I'm telling you, it's in demand. And it's not likely to be replaced for decades. Jobs like electrical engineering or installation technicians in various fields. For the purpose of this video though, I'm speaking to you if you're not already independent wealthy, and we're talking about taking the money you earn from a job and investing in an asset aside from yourself that will deliver for you a healthy return in the future, and yes, has a significant chance of making you a millionaire if you heed and follow this. All right, let's dig in. Step #1, take action. Yeah, it's not any more complicated than that. A ship at sea can redirect. One at port's stuck. So start. Even if you ignore everything I say in this video and lose money on some harebrained scheme, you'll have earned the scars that'll make you a wiser investor in the future. So, as my friend John Acuff says, punch fear in the face and take action. Step #2, if you have a match from your work on a retirement program, maximize that max, but not a penny more. Now, ideally, this represents between 20 to 40% of your monthly investment total. So company portfolios, investment portfolios can sometimes be very limited in the options to invest in. And they often have government restrictions on how early you can access those funds, which if you truly plan on retiring before the government says you can, then limit your exposure to investments like IRAs and 401ks, or at least be aware of the limitation. For this section of your investment, I'd look for small and mid-cap funds in the US for right now. While P/E or profit to earning ratios, which means the price you pay for a stock at X times more than the revenue it earns, all-time highs, I'm still particularly bullish on the US over the next 5 to 10 years, given that since the current administration took office, there have been close to $2.5 trillion in commitments to investing in the US economy in the next 4 to 5 years, which at a basic level, I believe means construction, manufacturing, and blue-collar work is truly about to boom, baby, okay? Now keep in mind that this is going to be a portion of your money in your portfolio that you don't look for maximum returns, because you may be already up 100% with your company match. So in my eyes, this is kind of safe money. So don't go super aggressive here, and use this to diversify into more stable return investments. Heck, even a fund like Vanguard's VOO, which tracks the top 500 largest US companies, or Vanguard's Small Cap Growth Index Fund, IJR, the key of this step is to maximize your match. So, if you invest $100 and your company matches that $100, you now have $200, okay? So that's why take advantage of it. It's free money. You're not gonna get in anything a guaranteed 100% return. So you can be a really crappy investor, or in this case, have a smaller return and still end up significantly ahead because you're doubling the initial investment. Now, the risk is gonna be in step 3. So you want step 2 to be less risk, more traditional business, okay? And again, the point of this step number 2, is for you to get that double match and then invest it in areas that are diversified from the higher risk, higher growth that we're gonna talk about in step 3, and still have it be your safe money. Are you ready for step 3? Well, let's get into it. Step number 3, invest everything else you have in high growth sectors like AI, automation, and Bitcoin. This should be 60 to 80% of your total investment. So first off, let me say that as I record this, Bitcoin is near an all-time high and many companies are trading near record P/E levels, or the price of a stock times X years of earnings. While I believe there will probably be opportunities to buy cheaper, definitely times to buy cheaper, in the scope of 10 years, I do believe that there will be companies with $20+ trillion market caps, at least 10x where it is today. So don't wait to time the market. Refer back to step number 1 and take action today, okay? Secondly, I'd split this investment 50-50 between Bitcoin and AI and robotics. So if you have $500 a month to invest, you take $250 and invest into each category. If you're more comfortable with one category, then adjust your percentage to your comfort level. Just remember, it is important to diversify even when concentrating investments into just a few categories. Personally, I'm a fan of buying Bitcoin and holding Bitcoin directly, not through an ETF. You can get my course on money and crypto that right now is absolutely free, although I am going to be charging very soon. So I'll show you how I lost hundreds of thousands of dollars on scams and how I safely invest today. Now, what's clear to anyone watching is that Bitcoin specifically, not all crypto, it's being groomed for global adoption as a store of wealth. With a limited 21 million Bitcoin supply, I don't believe that there is currently another asset with less risk for more potential reward around right now than Bitcoin. I've made loads of videos about this in the past, and you can click on those right here, wherever it pops up. Now, with the remaining 50%, I'd diversify from Bitcoin and buy AI and robotics. As of today, I am still a huge fan of Cathie Woods and her team, regardless of what the haters say. I believe she and her team have a tremendous pulse on big picture macro trends over the coming 5, 10, 15 years. And this is exactly what I'm looking for if and when I outsource growing my money to a fund or a company. So for that reason, an ETF like ARKQ or the NASDAQ, NDAQ, which follow the top tech stocks in the US, are top picks for me. These funds are more volatile, and historically they go up and go down, yet the best ones will go up a lot over time. Now, if you want to become a subject matter expert and study AI and look for emerging market makers, go ahead. My piece of warning here, though, is this. The landscape is far more risky right now because the industry leaders are unclear. Every industry leader is only one breakthrough away from becoming a dinosaur. The same way Earthlink, Prodigy, Net Zero did with internet access. And chances are most of you watching this have no clue what those companies are. And that's my point. Also, a major question is yet to be determined, and that is, will major tech companies like the FANG, Facebook, Apple, Amazon, Netflix, Google, will they buy startups and maintain control? Or will new startups refuse buyouts and become the ones who buy these giants in a decade or so? We know Facebook's attempt to hire away top talent has backfired so far. So for now, I'm gonna delegate my decision-making to teams and people with far more resources and insights than I do, and probably than you do. Now, I can hear you in your mind asking some questions. So let me address some of the common questions that are probably coming out of you about this strategy to investing. Number one, with interest rates and prices at or near all-time highs for both, real estate, I believe, is no longer what it once was for wealth generation. I believe it's become a method of wealth preservation. So once you have money, you can buy cash flowing real estate. Until then, focus on growing your wealth, not paying banks 6 to 12% interest on a 2 to 5% margin. Now, what about gold and silver? I'm not against these as hedges of inflation. Gold, I see doing well. However, Bitcoin is far superior as an asset class, in my opinion. And here's why. Bitcoin, you don't have to lug around. You don't have to find someone who's gonna, give you a certain exchange rate or, this or that or whatever. Gold bars or gold coins, if Armageddon happens and the world is, well, gold may be able to help you, okay? I'm not against it, I'm not. I'm saying though, as long as every computer, electronics, the internet, all of this continues to function without a solar flare or something like that, if you have to get fiat money, US dollars, and you own Bitcoin or you own gold, which one are you able to exchange faster? I can in about 30 seconds. Well, let's call it 2 minutes. I can take my Bitcoin from a cold wallet, move it over to an exchange, on that exchange it for USD, and transfer it over to a checking or banking account. Okay, you can do that as well, all sitting at my desk or on the phone. Gold, it's much more complicated. It's cumbersome. So for that reason, there's more gold that gets, released every year. And as mines and more resources are found, there's more available to get mined. Whereas Bitcoin is a fixed digital asset. There will never be more than 21 million. And it is the #1 performing asset of all time. Keep that in mind. And it's only begun. Its mainstream adoption is just beginning. So remember, unlike physical rare earth assets, Bitcoin has a hard fixed 21 million. Now, Michael Anthony, you've done a video talking about diversifying into Ray Dalio's 12 to 15 uncoordinated asset classes. What about that? All that's great. It's real, it's true. But if you're starting out, I studied the ultra wealthy and I discovered something contrary to what I was taught. The vast majority made their money by being ultra concentrated into 1 or 2 or 3 emerging markets, companies, areas. They saw an emerging trend and went all in. Mark Cuban, internet broadcasting of college. Steve Jobs with Apple. Elon Musk with PayPal. He took PayPal, put that into Tesla and SpaceX. Even if you research the early years of value investor Warren Buffett, you'll find he admits he went all in on a few investments that paid off huge. That's it. 3 steps, 3 principles, 3 keys to make you a millionaire. In today's market, this is 100% what I would do. Okay? Now, I'm really purposing to speak to investing, money, and the changing world in a bit of a more raw and relatable way in this video. If you're enjoying this, please hit the like button if you haven't already. Thank you for those of you that have. Share this, be sure to subscribe, but share it with someone to help the algorithm realize you like this video. Thank you from the bottom of my heart for all your support. I want nothing more than to help you realize your dreams are meant to be lived by you. So I'll see you in the next video, and until then, you keep living your life to the fullest. Peace.